Hi everyone, Dan Tyler here again. I hope you had a lovely weekend and I hope you're all doing very, very well. Looking forward for the trading week ahead. I'm bringing this video to you on a nice Saturday morning. I was just doing my majors analysis and the euro dollar was one that stuck out for me. I thought it was in really, really nice position for a breakout. And I'll obviously show you guys how I came to that conclusion. So I've popped in a rough channel on the monthly chart. So I don't usually start off on the monthly. However, we did just have the monthly candle close, obviously at the end of the month. So it's really, really good just to check out and see what candlestick was created at that point. And we can see here that on a monthly basis since 2007, 2008 time, we've just been stuck in this bearish descending channel. And obviously, in more recent weeks, we've just seen really, really small price action, very, very rangy. But last month, we did actually reach the channel resistance here, and we got a really, really nice bearish candle. And when we zoom in, really nice candlestick formation here. It's actually a bearish engulfing, which means that there's a lot of bearish sentiment in the market, especially after a really nice big push up, which we did have. So this is great confirmation that there's bearish sentiment in the market, and we can obviously filter down our entry points onto our lower time frames, as the monthly is a bit too high of a time frame to really enter any trades, simply because they can take so long to complete and you'll be paying a lot of money in swap rates and actually holding on to the trade itself. So with that in mind, just to provide a little bit of context, I'll put in our support and resistance monthlies. And it's not a surprise why we've seen this bullish engulfing candle, because we have hit a really strong institutional level as well. So at this point, we would expect big institutions and banks to start actually selling this currency off, making it stick within its current range right now. And we can use stuff like the stochastic, as we know that we are stuck in this range. You can use stuff like the stochastic to really give us any good signals on where the market's going. So just as an example, we can see here that every time it's hit a support or resistance level, the stochastic has given us maybe an overbought or an oversold signal. And what I always like to do, and it's how you should really trade on the stochastic, is always wait for the percentage D and the percentage K to actually cross over in the overbought or the oversold zone. So when we go down to here, as an example, you can see that we did get a crossover there and the market did go up for a couple of months. And here we actually did get the crossover now in that point. So it looks like the market is certainly going down price action wise. So then we filter this down into the weekly. When we go into the weekly, we were in a channel down here. However, we did recently break that over the last few weeks. So I'm just going to leave that out and just focus on institutional levels at the moment, as we do want to understand where banks are looking to really put in and build up their positions. So I'll put in our support and resistance weekly and see if there are any levels that come into play. And it just shows that the euro dollar is in a really reactive point. We did have a very, very nice bit of bullish momentum going to the upside, breaking through this institutional level here. The bullish momentum kept going up, and then all of a sudden we had some indecision and then a big bearish candle. So what this candle formation is it's called an evening star. A lot of the time in textbooks, this goes over 3 candlesticks. However, in this case, it went over quite a few, because what it's essentially telling us is there's bullish momentum, all of a sudden some indecision, and then right here, the sellers are now in control. So it looks like there's a lot of bearish sentiment going on in the market and also room for movement on the downside. So I wouldn't be surprised to see if we saw this currency go down a lot more this week, at least until these levels. As you can see, these levels have been very reactive in the past, especially this one here. So I would expect to see a reaction down at this level and see a nice bounce. So this just sets us up for the fact that when we go into lower time frames, we'll be looking for short positions. It'd be a high probability trade. There are strategies you can implement to go against and do counter trend trades. However, I like to build up as much probability as possible. I like to go with the trend. So with that in mind, I'll go on the daily and then we'll see what is happening in more detail price action wise, see if there's any trend line breaks and see where the market is essentially going. So with that in mind, I'll put on our up trend lines indicator on the daily, and we can see here that with this back tested strategy that Andy has created, when you draw trend lines like this and there's an inner trend line break, which you can see, there's an 80% chance of the market hitting the next trend line. So this gives us excellent confirmation that the market is looking to push down, simply because we've had two inner trend line breaks and beginning a downtrend now, potentially waiting for that third touch of a trend line. And it will be good to implement some indicators just to build a bit more of a story. But from a price action perspective and looking solely on trend lines, the market's looking to push down to here or down to that weekly level. So with that in mind, I'll also put on our downtrend lines as well, because here it seems like the market has in fact reversed. We have had these inner trend line breaks, so we are looking for bearish sentiment in the market. So I like to use the combination of both up and down trend lines sometimes, because you may find that where the points cross over actually indicates really nice buy or sell signals. So in this case, we actually have a very nice sell signal here, simply because we have the inner trend line break, the retest of that trend line, and that's actually created the second touch of that trend line. So we've got a higher high and then a lower high here. So a higher high, lower low, lower high, lower low, and this will be the lower high again. What I would like to see before we do go down any further, however, is I would like to see a touch off of this trend line. The third touch of a trend line always confirms that trend. So it'll be really nice to see the market just have that little bit more of a push up, or even see a bit of consolidation to touch it, just so we can make sure we get in at a better price. Because for a lot of times you can simply get in on this candle formation and the market can go against you straight away, and you could have instantly got in at a better price if you were just patient. So in my mind, I'm thinking that there's a lot of bearish sentiment in the market right now, and I would like to see a touch off this trend line. So I'm not necessarily going to think about entering until I see a touch off this trend line, to be honest. And then what we can do is put down our Fibonacci, down Fibonacci, which will show us what wave the market is in. I would like to see that this would be a really nice confirmation of a fib pullback, a C pullback, for us to then go and hit our D extension. So if we put down our down Fibonacci, it's done exactly that. So we can see that the market has created its D extension, confirmed its C pullback, could have a little bit of further, maybe even until the golden ratio, which will be really nice to see. However, I'm happy normally with a 50%, which is what we've pulled back to. So when we have a touch off of this trend line, I think it'll be a really nice entry point for a short on lower time frames, and we can see how we can enter into that. And then just finally, before we go down into the lower time frames, it's always good to check our support and resistance. In my opinion, support and resistance is one of the most important things that you should be focusing on price action wise. It gives us an idea of where banks are looking and where institutions are looking to put in their positions. So we'll put in our daily support and resistance levels, and we'll have a nice zoom in. And we can see here that we've actually had I'd class that as a slight touch anywhere within 5% of the line. I'm very happy with. I'd actually say that's a nice touch off of the daily level. So I would still like to see maybe a bit of consolidation and a bit of a push up to the trend line somewhat. But it does look like that this would be a really nice strong point for a rejection. especially here, because that's where the confluence is lying. So if we have a bit of consolidation, then a spike up for it to go down, that would be perfect. And we can target these sorts of areas here. If you're more of a short-term trader and you want to keep it high probability, you might want to just enter sell positions until you hit these areas around here, and then just accumulate your positions or just do multiple positions across the week, which is what I'll probably be doing. But this gives us a really, really nice indication on where we're going. Price action and indicators are telling us the same story, and it looks like the market is wanting to push down, which is great. Then we go down into our 4-hourly time frame. And again, I'm going to do the same as what we did on the daily. I'm going to put in our uptrend lines and also our downtrend lines, just to give us an idea on when we're looking to get out of the market and when we're looking to get in. So I'll put the downtrend lines in as well. And this gives us, again, even better confirmation that we did start this downtrend as soon as we had this trend line break and the retest there, which actually gave us a really, really nice sell signal there. We had a really, really big bullish engulfing candle, which we can see had a really, really nice reaction down. But we actually have had an inner trend line break as well. And again, there's an 80% chance of the market going and touching this trend line. So with that in mind, it's just confirming that I'm looking for a trend line touch to enter for this trade, to be honest. As soon as we touch this trend line, I think it will be a great little entry point. And with this in mind, we have had a bit of a push up. This could be a nice head and shoulders. It will be nice to see a head and shoulders there for an extra bit of confirmation. However, it may not be so much of a textbook one. It might be a bit higher than the left shoulder, which isn't normally what I'd like to see. But it could just be on lower time frames that we're simply stuck in a range, and that's what I'm expecting. So for those of you out there who are range traders, you can potentially get in on a really nice range trade here as well. But with that in mind, I'll also put in our 4-hour levels and see if we're at any important levels. So you can see that we are at some important levels as well, some really key, strong support and resistance. We have recently broken this one, but again, we've broken it before quite recently, especially here, and it looks like we've just repeated that process again. So in my opinion, I think this is likely to break and maybe go up to here, and it'll be really nice to get an entry around this sort of area. That would be honestly a perfect entry. Really, really strong institutional level, coupled with the third touch of a trend line and also a fib pullback on higher time frames. That's perfect. I'd absolutely love to get into a trade like that. And then simply we can go onto the hourly and check out what this range is looking like here, because that's what I'm expecting. So when I like to go down into the hourly, I don't usually just pop in all my trend lines like I've just done on the 4-hour. This is usually my anchor chart. This is where I make the majority of my decisions. On the hourly, I'll just pop in the 1-hour support and resistance lines. And we can see here actually that we are stuck in a range. A range is defined by at least 2 touches of both support and resistance. So we have 1, 2 for resistance and 2 for support, which is great. So I would class this as a range. And then with when the market is ranging, there are certain indicators that are really good to use. Stuff on TradingView, you can use the stock RSI, which I like to use on higher time frames. However, I find the stochastic to be really, really accurate for certain currencies when the market is ranging. So what I'd like to do is actually put in the stochastic and see if the stochastic has given us any buy or sell signals. So the question that you always have to ask yourself is, has it been reliable? Has it cut out the noise in the market? And whenever it's gone into an overbought or oversold area and the percentage D and the percentage K have crossed over, has the market gone up or down? So just to focus on reliability here, we did get a sell signal. There was a bit of consolidation, but we did get a sell signal there. We actually got two of them, which is great. And then the market did go into oversold. However, the percentage D and the percentage K lines did not cross over in the oversold area, so I wouldn't have bought on that. That's a really nice sell signal. You've got the percentage D and the percentage K crossing over in the overbought zone, which has then led to this one, which is another buy signal, especially with a candlestick formation as well, to go up to here. On stuff like the 15-minute and the 5-minute, you would have gotten a nice trade. However, it does look like we're potentially looking to push up to these levels here. So as soon as we get some sort of touch within this key level, confluenced with this trend line, I think this would be a very, very nice entry point, even for a range trader to get in, and you can even get out here if the market does take another bounce. But if you do feel like a little bit, you've got a little bit more of a risk appetite, certainly what I like to try and do on breakouts is get in at the best price possible, and then this is likely to break, in my opinion. So you can actually get more risk to reward at the end of the day. So my entry point that I'm looking for, just to summarize, on the 4 hour, I'm looking for a nice trend line touch coupled with this key institutional level. And in more detail, this is the key institutional level that I'll be looking at on the 1 hour. And I would like a nice sell signal. I'm tempted maybe to even just put in an order. However, I do want to make sure that the trend line is touched first. So that's why TradingView is great for alerts, and you can make sure you stay on top of the market that way. So I hope that's been useful for you guys. I think the euro dollar is in a very, very reactive position right now, especially if we do get that trend line touch. So I hope it's been useful. If you do have any feedback, please leave a comment. Please get in contact, and we're happy to help wherever we can. And I hope you guys have a good week. And I'm excited to see all your trades on the Facebook group. I'll speak to you later, guys. Bye bye.